Assalamu alaikum everyone. I'm Neha Umar, the COO of Smartson. Today we have Mr. Faraz Abbasi with us. He is a managing partner of Centerfield Capital Partners. He has 20 years of experience in private equity. He has been recognized as one of the 40 under 40 young leaders in Indianapolis, who's who in finance by the Indiana Business Journal, and was the winner of Juniors Achievements Indies Best and Brightest Award. He has served as chairman or director over a dozen of public and privately held businesses and nonprofit organizations. Mr. Abbasi, many thanks for taking time out of your busy schedule to do a session for Smartson. As you know, I'm hosting this session in place of Sakib Shah. Sorry he couldn't be here because of a last minute urgent meeting.
Sure, no problem. I'm happy to be with you guys.
Okay, please tell us something about yourself and a little bit about your firm as well.
Sure. So, background: born and raised in Karachi, moved to the U.S. in early '90s, and went to the University of Texas for my undergrad, and then graduated from there in chemical engineering. And after graduating, moved to Indianapolis to work for a couple of larger Fortune 500 companies, and since then joined Centerfield once I got my MBA at Indiana University. So that's kind of a high level background. I've got three kids. My oldest is 18. He's at college. And then I've got two girls, 16 and 11.
Okay, how would you describe private equity in layman's term or in a way that is easy for students or fresh graduates to understand?
Sure. Yeah, private equity, in my mind, is a pretty extensive field. So it can start from venture capital, which we'll get into in a little bit here, all the way to late stage investing. So private equity essentially at a high level means investing in privately held businesses. So if you look at the stock market, if you're investing in publicly traded equities, private equities on the other side, where these are illiquid assets where you're investing for longer term, the returns are a little bit higher than the stock market. And at the high level, it's essentially investing private capital in privately held businesses.
Okay, can you give us a brief outline of how private equity works and what it focuses on?
Sure. So it can go from companies like Apple or Intel, Google, Facebook. They were all venture backed when they were started, right? So it was a disruptive idea. It was a growth idea. These entrepreneurs, were going to tackling a market or growing a company in a market which was kind of new and pretty nascent at that point. So private venture capital starts there, where the company has been founded, there is some revenue generation, but it's not generating any income essentially. So capital is going in the form of preferred equity in those deals to have those companies invest in infrastructure, in people, in marketing, and developing the product. So that's one aspect of it. So if you move all the way to the other end of the spectrum, it's mostly late stage investing, which is essentially means that these are business owners who run the companies, operate the companies, have grown them to a level where they're saying, well, most of our assets are tied into this business, so I want to take a liquidity event so I can diversify my asset base, and then private equity will come in and buy that company, provide equity capital to these guys. They move on. We run the companies on their behalf, and then essentially grow the companies.
Okay, as we all know that you're a very successful person in what you're doing, how did you start your career in private equity? What is the roadmap what roadmap did you follow to reach where you are today?
Sure. So mine was more, I would chalk it up to being lucky than smart. So I was at the right place at the right time. So our firm was just starting off the ground when I started. So we hadn't raised much capital. We were literally in the earlier innings of raising capital to start our fund. So two of my partners started it. Since then, they've retired, and I come from the non-traditional private equity background, so which essentially means chemical engineer by training. Got my MBA, but nevertheless didn't have the investment banking experience. Didn't go to Wall Street, worked there for a few years, so didn't do any of that. So that's non-traditional, and that's um, in this competitive environment, it's very difficult to get into private equity from that kind of background. So that's kind of set that aside. From the traditional private equity background, usually individuals have a undergrad in finance and some business degree. They typically go to an investment bank, work there for 2 or 3 years, and then after they're done with the investment banking experience, they go get their MBA and then join a private equity firm.
Okay, at what stage of your career development did you decide to have a career in private equity? What was the thing that encouraged you to choose this career, and what were the motivations?
Yeah, no, I'll be very honest there. So I didn't know very much about private equity when so I was 26 years old, and I didn't have a clue what private equity was outside of the fact that young MBAs typically end up in private equity after they have had some investment banking experience, and that's kind of a good home for them, for young MBAs to end up at. So that was kind of my level of depth of knowledge of private equity. So I reached out to some of the professors at the university, said, hey, I'm interested in this field, I want to learn. And they introduced me to a couple of these local private equity guys who are kicking the tires on this idea. So that's how I started in private equity. I was just exploring it further, learning what it was. So I was, again, not much experience when it came to my knowledge of private equity at that point.
Okay, that's an interesting story.
Yeah.
How fresh graduates should align their milestones to achieve a successful career in private equity? What type of professional development resources are available to them?
So I mean, I think it's a difficult question to answer because it's a tale of two cities, right? If you're coming from Pakistan, if you're talking specific Sindh related, it's quite different than if you're talking about kids in the US who are trying to go into private equity. So I'll probably more gear my answer more towards the kids in the US, and then I can go the other route as well. So from the kids in the US, typically how they end up in private equities, again, this traditional route of going towards business, getting the MBA, and talking to people like us, and then having some success. And that's how we hire at Centerfield. We are a small shop. We have 14 people, but that's how we hire from that perspective. In terms of people, kids in sin, and what they're trying to achieve. In my opinion, I don't know much about the economy there anymore, but in my opinion, I think there is a lot of opportunity because there's, the whole field is being formed and started in Asia now more than it was, 20 years ago. If
Okay.
that makes sense.
Yeah, that does. So, as far as a career in private equity is concerned, what are some of the skills that are mandatory to have?
So I think the general skills at a basic level will be financial modeling, analyzing a business, looking at the strengths and weaknesses of business, and saying, hey, this could make a good investment for the firm. Outside of that, I think the intangibles, the skills which are more difficult to find, because I mean the financial skills modeling, and I think a lot of us can learn, but none the intangibles would be good interpersonal skills, being extremely proactive. So you're reaching out to your network and trying to grow the network, getting involved in the community, um, really trying to achieve a level of opportunity which people are you're doing more than the next guy down the street, if that makes sense. So there's a lot more hard work, different, again, getting involved in the community is a big help to us. Usually, kids who are or people who are successful in private equity are bringing deal flow to us as well. So through their network, they're bringing investment opportunities which is also difficult for young analysts and associates to do. So that I would say more interpersonal skills and networking and business development.
Okay, that's a good piece of information. What roles does a private equity firm serve in helping a startup organization?
Not much. So private equity, again, even if you talk about venture, it's probably third or the fourth stage of the growth of the
Okay.
business. So usually the company is founded by the friends and family around, if you will. You're investing your own dollars in, or your own capital in, and then the next stage is trying to achieve some kind of revenue, trying to achieve some kind of customers, and then proving the business model out. And at that point, you're going to the venture capital, so and try to get capital to grow to the next level. So usually I would call it stage 3 or stage 4 of your growth, of the company's
Maybe
growth.
the later stage, right?
Yeah. So if you look at the growth of company, we call it the S curve.
Yes.
So initially the first 2 or 3 steps of as the S goes up are usually funded by the individuals, the entrepreneurs, and their families and their friends. And then once you go to stage 3, which is still, this is maybe not pre-revenue, but revenue starting to be generated, but there are no earnings, and that's where venture will come in. And the next stage is when you have a strong customer base, you have revenue, a lot of revenue being generated, you have earnings coming in, and that's where private equity asset class comes in and invests in the company. And the next stage is typically IPO or
IPO, yes.
setting to a strategic buyer.
Okay. According to your profile, you specialized in private equity investing, mezzanine financing, and buying out, among all other things. So, as per your experience, who are the ideal investing partners?
Companies we invest in.
Yeah, yeah.
Yeah. So companies, I mean, Centerfield specific, I don't know how relevant this would be, but Centerfield specific, our companies we are investing in are typically generating 20 to 100 million of revenue, historical revenue, not forecasted revenue, and companies which are generating 4 million of earnings, EBITDA, we call it. So cash flow. So 4 to 10 million of cash flow, 20 to 100 million of revenue. Companies are in distribution, manufacturing, business services, and healthcare. So those are the 4 sectors we target, and typically we are coming in where the entrepreneur or the company owner has grown the company to a certain level. We are coming into it to provide them a liquidity event and then also help them grow the company to the next level.
All right. You have been recognized as 40 under 40 and who's who in finance by the Indiana Business Journal. So, what advice would you like to give to the young aspiring youth of Sindh who dreams to reach the same position or place as you have?
Sure. So I think a couple of things come to mind. One is, um, being proactive in your life, and not sitting idle and trying to think through how the individual, this how we all can provide value to what we do, right? So outside of just somebody telling you what to do on a day-to-day basis, do more than that, right? Go outside the box and do a little more hard work and try to be creative about different ideas. The other one is also, like I mentioned earlier, get involved. That's a pretty big deal. I think the more people the more of a network you have, the better it is. I think as you grow your career. The last one is, don't shy away from once you get a lot of no's, right? A lot of no's will eventually turn down to be a yes. I mean, there are examples of very, very successful people all over the world where they've been denied, and then they have had a lot of success on the back end.
Okay, so what are the main things you consider when acquiring a firm or investing in one?
So from Centerfield's perspective,
Yes, yes.
Yeah, so we look at so again, there are investment criteria. So there's revenue, EBITDA thresholds, industries of interest. But if you look at it, again, the things which are very important to us would be the depth of the team, management team, and the people who we are backing into these companies. So we want people who are not only who not only have a good track record but also are a good relationship driven organization, relationship driven people, and people whom we can trust. But essentially, we are trusting these individuals. We sit on their boards of these companies, try to add as much value as we can. But at the end of the day, the company is being operated by these individuals who are responsible for the growth of the business. So people, it's our business is a hugely people oriented business. You have to have a good eye and ear for deals and know what works, what doesn't work. But outside of that, it's just backing the right people and having a good, strong relationship with the individuals you're working with on a day-to-day basis.
That's great. As you know, Smartson is a startup that aims to bridge the knowledge gap. So, what are your thoughts about our Smartson as a startup itself?
Yeah, I'm just learning about it. So I went to your website and checked it out. I think it looks very good initiative. So I would like to learn more about it. It sounds like it's an opportunity there for our our brothers and sisters in sin, and trying to help them out. So I don't have much to share outside of just learning more about the organization, and wherever I can add value, I'd be happy to.
Okay, as a venture capitalist, as far as I know, you invest when a firm is in later stage, when it's gearing up for an IPO, to be specifically in mezzanine stage. But as a venture capitalist yourself, what exactly do angel investors look for when they are investing on an idea?
So, I mean, clearly, the things they're looking for are disruptive technologies and markets which have not been explored or are in the earlier innings of exploration. So opportunities like a Facebook or a Google, right? I mean, there was no big search engine out there, such an easy search engine out there. So these guys figured out where to find, a market which was in the earlier, early innings of its growth trajectory. So those are the things our venture capitalists are looking for is, hey, how do I find entrepreneurs and companies which are really looking at a hockey stick growth, right? Really strong growth in the future. But obviously, as you can appreciate, right, volatility in investing is very high. So venture capitalists are looking, chasing these deals, but then they will have maybe two or three home runs which are doing extremely well, and then six or seven companies which will not do very well for them. So they just need one or two winners to make their returns on the fund. um, so that's what people are looking for, is just some kind of market disruption and technology which they can invest in. And usually these venture capitalists have some background in the industries they're investing in. Compared to private equity guys, we have mostly finance backgrounds and MBAs. Venture capitalists, if you look at their pedigrees, they typically go, they may have more of a healthcare experience background or technology or some aspect of um, some expertise, industry expertise, where they can provide some knowledge to the entrepreneurs.
Okay, as an expert in private equity and having 20 plus years of experience in this very field, what are some of the main tips would you like to give to the ones who are struggling to get investors for their startups?
Yeah, that's a great question. I think the mistakes, you there's a short article by Harvard Business Review called the top 10 lies of entrepreneurs. So that's worth reading. It's a short list, but they go through 10 things which entrepreneurs present to investors, and investors just are shaking their head or rolling their eyes that how is this even, why are they even presenting this? So one of those things is their projection models, financial projection models are very aggressive and almost impossible to achieve. So I think being reasonable about your growth patterns and how the company is going to do in the future is good. Um, the other one is, being realistic about your valuation. Entrepreneurs are always thinking, hey, our value of our business is this high. In reality, the market will pay something lot less than that for the equity in that deal. The third potentially reason is, I think you've got to figure out when you get a lot of turndowns from venture capitalists and investors, you got to figure out what's not working, right? Are you targeting the right groups to invest in a company? Because every venture capitalist, private equity guy has certain criteria we invest in companies. So if those companies don't fit our criteria, we don't invest. So some of the entrepreneurs, it's a shotgun approach. They'll send a deal out to 50, 60 people, investors, and you know 45 of them may not do deals in that market. So I think targeting the right groups for making the investment, who the company fits the criteria, is super important.
Okay, that's great. In your opinion and as per your experience, how does an investment or private equity transforms an industry or an idea? What is the significance, especially when it comes to synth?
So your question is, how does private equity transform an idea into
Yeah,
into
or an
some
industry. Yeah.
other industry? Yeah. There's examples. Like I said, Facebook was private equity backed, right? Google's private equity backed. IBM was venture backed. All these startups who are major behemoths now are all venture backed. So I mean, clearly they've been hugely beneficial to the world economy, right? All these big, massive companies, like if you're on Zoom or whatever cloud based systems. I mean, they're all venture-backed companies at some point in time. Um, so in terms of private equity not only brings capital, but they also bring a lot of industry knowledge and wealth of experiences. So what we've learned, I mean, I wouldn't know. I mean, I'll give you an example, right? I'm on the board of a HVAC business, which puts heating, ventilation, and air conditioning equipment in buildings and commercial offices. So I don't have much knowledge there, but I can tell that particular business on the board that, hey, this is what I've learned in other businesses, and I can help with acquisitions, or I can help on the financing side. I can tell them strategically, how do you go from this step to the next step. So that's kind of, private equity uh, folks and individuals, fund managers, have more experience than just providing capital. I mean, they get into the weeds, and not in the weeds, but they get on the strategic side of things and help grow the businesses they're backing.
So they have all the guidance, right?
A lot of it. I mean, they can provide experiences which they've learned from. I mean, clearly, not all our companies are performing well, so some are not performing. We learn a lot from the underperforming companies. Some companies we write off, so we learn a lot from that, and then that experience can be utilized in companies we're backing on, new platforms we're backing.
Okay. Can you give an example of the most successful deal or investment of your entire career? What was it about?
Yeah, successful. I would call successful more fun. The funnest deal I've worked with is a company which made impulse purchase items. So they sold into Walmart and some of the retailers. And this company was started by an individual who came from South Africa. With, I think he's told me $5,000 in his pocket. He's an accountant by training. He came to the U.S. Was an accountant here with forget, one of the big three, big five firms. So he worked there, and then in California, he was on the West Coast in California. He didn't have a lot of money to buy an apartment, so he bought a small studio, and they have to wear ties to work every day. So he didn't have enough room in his closet to put ties. So he invented a hanger, so he could put a lot of ties on one hanger. So that's how his company started, and he invented that. Went to Walmart, sold that idea, and the guy said, "Well, Walmart guy said, well, this is a great idea. We should start selling." So they start selling those hangers, and off that he started a company which became an impulse purchase company, item company. They had they have slippers with mops underneath them, so you can walk around and clean the floor. They have It's called Nano Saver. They've got a little banana holder where you eat half your banana and save the half the other banana in the fridge. I mean, stuff like that, which is just you go to Walmart or where you go to a retailer, you say, well, that's a cool product. Why don't we just buy it? I mean, small, low ticket item, so it's not a hugely expensive purchase, and that company did extremely well for us. We invested in it when I was doing smaller EBITDA earnings, and it quadrupled in 3 years of our investment.
Quite interesting.
Yeah, really fun.
Yeah, thank you for your time, and it was pleasure having you. Thank you for sharing all the opportunities and information with us. I hope a lot of people will be able to benefit from the information that you have provided us.
Yeah, most welcome. No, thanks for having me, Neha. Appreciate it. And good luck with Smartson as well.
Thank you so much.
Yeah, you bet. Take care.
Bye. Take care.
Allah Hafiz.
Allah Hafiz.